Welcome to Electrified. It's your host, Dylan Loomis. Quick shout out to my newest patrons, Gary S. and Bill H. Thank you for choosing to support the channel. Just FYI, for today's video, I will be going a bit quicker than usual as I have an event that I need to get to later tonight. To clear it up, there was some misinformation out there over the weekend about this Form 4 that was filed on behalf of Drew Baglino, in which he gifted, not sold, 38.1 thousand Tesla shares to a CRT or a charitable remainder trust. In case CRTs are not on your radar, oftentimes the grantor, in this case Drew, would pick a charity and a non-charitable beneficiary. A CRT is indeed irrevocable, meaning Drew could not pull those Tesla shares back later even if he wanted to. Typically, these are set up so the non-charitable beneficiary can actually receive income from this trust for a set period of time. Then after that period of time, the charitable organization actually would receive the remainder of the funds. Thus, with a CRT, you can give money to charity, get an upfront tax deduction, and also give income to a chosen beneficiary for a set period of time all at once. Naturally, folks were out there trying to decipher what this means for Tesla stock going forward. My response would be absolutely nothing. It was only about $7 million worth of Tesla stock. Personally, I would not read into it at all. Over the weekend, Lipsite on X shared an image that Tesla is yet again offering FSD transferability if you buy a new Tesla before March 31st, 2024. It also said this vehicle is eligible for a one-time free supercharging transfer if taking delivery before the same time. Before I go any further with this one, I need to make this very clear. This is an evolving situation as I record this right now. There's a lot of conflicting information out there from different customers in different geographies, getting different answers from different Tesla reps. The latest from Drive Tesla Canada confirms FSD transfers are now also available in Canada, and it's valid on purchases for the Model 3 Plus. DTC is also confirming that you don't have to trade in your vehicle with free supercharging miles or FSD. You can keep that vehicle. Tesla will just remove those features from that vehicle and transfer it to the new one. This delivery deadline of March 31st definitely makes this a demand lever that Tesla is pulling. It should be noted though, the last time Tesla offered this FSD transfer, they also had a deadline, but Tesla did allow some FSD transfers for deliveries made after the deadline. I would not bank on that leniency again, but delivery deadlines are oftentimes out of the customer's control. Go ahead and pause and zoom in if you'd like. Here's the FSD transfer agreement. Again, this is a developing story, but the word is for all of North America, for all of the sexy lineup, both FSD and free lifetime supercharging mile transfers are now back if you take delivery before March 31st, 2024. The word is existing orders currently in the backlog are indeed eligible, and I'm sure a lot of you have got the text that you can get an additional $1,000 off if you are a Cybertruck reservation holder. The last time Tesla offered this FSD transfer, they said it was a one-time only thing. Clearly, that program had a lot of success and they fired it up again. Meyer shared a chart that I think is very important for Tesla investors to understand, but full disclosure, I don't agree with his statement that a rematch with a $105 Tesla price is likely, although sure, I would say it's of course possible. What we have here is Tesla's stock price in this blue line that I'm following on the screen currently, and then we're also going to focus on the earnings per share revision trends for Tesla stock. The red line here is the consensus for 2025, and the light blue line here is the consensus for 2024. Thus, we have Tesla's EPS expectations for 2024 sitting at about $3.40. What Meyer was highlighting was that when Tesla stock was down around $100 per share at the end of 2022, Tesla's consensus EPS, also at the end of 2022, was about $4. Yes, this is a great chart to understand, but please do not go making dogmatic proclamations, because if you look at Tesla's consensus 2023 EPS at the end of 2023, Tesla stock was around $260 per share. Plus, toward the end of the year, these consensus estimates are very close to being actual since they're only waiting on one more quarter of data. One more counterpoint to argue against the notion that because our EPS consensus is lower than where it was when Tesla stock was all the way down at $100 per share, look at Tesla's consensus estimates for 2021 that were around $1.90. At that time, Tesla stock was literally up near an all-time high around $400 per share. Truthfully, if that chart teaches us anything, it's that trying to predict any short-term stock movement, short-term being within 12 months, really is a fool's errand no matter what data you're looking at. That said, I think having the context that Tesla stock for a few years was in a phase of constant EPS revisions upward, and they have since shifted to a phase of EPS revisions downward. Thus, it would be fair to reason that until this downward trend of Tesla EPS revisions stabilizes and then hopefully resumes an upward trajectory, it will be very difficult for Tesla to even reapproach some of its prior all-time highs. If now Wall Street is only expecting Tesla to grow earnings by 10 to 20% per year instead of 30 to 50% that some were expecting before, of course, over time we should expect Tesla's PE to compress and come back closer to some of the other Mag 7 companies, which have been trading with PEs between, we'll call it 28 and 35. This is not a price target and absolutely no guarantees this would ever happen, but if you take Tesla's 2025 expected EPS, multiply it by a PE of 30, that would be roughly $135 Tesla stock. In case you're new, I do not condone obsessing over short-term stock metrics, but I do think that understanding these concepts can help you be a better investor in the long run. We did get a new Tesla stock note from Piper Sandler, who historically has had very reasonable and cogent takes on Tesla stock. After earnings and looking at the 10K, they now think Tesla will deliver 1.93 million vehicles this year versus their previous estimate of 2.18 million. That's only 7% year over year implied growth. They said more price cuts may be necessary, and thus they expect auto gross margins ex credits to fall 110 basis points year over year to 16.6%. Most importantly, they said we are no less bullish on Tesla's multi-year prospects. They said we think Tesla erred in prioritizing Cybertruck over a cheaper vehicle with wider appeal. They're not expecting the next-gen vehicle to debut until the fourth quarter of 2025, so they're expecting slower volume growth for this year and next. They've dropped their price target from $295 down to $225. Speaking of 2024 EPS cuts, Piper Sandler just reduced theirs to $2.95 from $4.70. This article was shared over the weekend, but if you actually read the article, you realize we should probably be taking our foot off the accelerator. A professor from Johns Hopkins did an analysis on that Talon Metals mine we talked about last week, saying it could theoretically net more than $26 billion in subsidies just through federal tax credits. He said one of the largest beneficiaries would be battery manufacturers that use Talon's nickel, which could secure more than $8 billion in credits. About half of that could go to the EV giant Tesla. He added American consumers could enjoy nearly $18 billion in savings. Naturally, people were loving this assessment, but if you read on, these numbers assume that every company and customer qualifies for every tax credit available at each point along the supply chain. In other words, these are high-end estimates meant to lay out the potential of this plan, not showing what is likely to happen from this plan. I would also add these figures are dependent on one, Talon actually finding some ore to mine, there are no guarantees, and two, when they do find the ore, how much nickel is actually going to be in it. Talon could also change its plans at any time, and if Talon does find some ore to mine, let's not forget the actual mining process then has to be approved, which could take a few years. The law does specify that a company has to convert nickel into a highly refined form known as nickel sulfate, or process the metal to at least 99% purity by mass to be eligible for tax credits that cover 10% of the operating cost. Then from there, the nickel would still need to be processed and mixed with other metals to produce the cathode active materials that go into a battery. Meaning yes, some share of those subsidies from these two tax credits might go to Tesla. Tesla is in the midst of finishing up its own cathode facility in Austin, and we know it's going to begin refining lithium, so maybe in the future they'll refine nickel as well. It's absolutely true that if this Talon Metals mine comes through in the future, Tesla stands to be a major beneficiary. I just needed to add some context to that $4 billion number, saying it's definitely on the high side and it's not a guarantee. Over the weekend, Elon was out with some friends at the Lola premiere.
Looking cool. So what brings you to the Lola carpet?
I'm just here with friends, you know, thinking about companies to acquire.
Whoa, like Fab TV? Maybe you can acquire Fab TV, okay.
No word yet on what companies. It appears as though somebody sent Sawyer a screenshot that Tesla is now advertising on X in Japan. After the Q4 call, we knew something like this would be coming, and I agree Tesla should be advertising off the X platform as well, which they are, but don't forget the Japanese have a massive presence on X. Australia just set some new emissions reduction targets for next year. Starting January 1st, 2025, car companies must sell enough low or zero emission vehicles or buy emissions credits from other car makers which have met the targets to offset the biggest polluters in their model lineups and avoid paying fines. Every year, the CO2 emissions target for each manufacturer is reduced, making it harder to meet. On the flip side, car companies that do meet the targets are in line to earn credits which they can sell or trade with brands which do not meet the standards. The government says its proposal would see Australia catch up with fleet emission standards in the United States around 2028. Car makers will have to meet an average across their fleet. This is not a restriction on what Australians can buy. Today we also had SAP, Europe's biggest software company, to stop offering Tesla vehicles to its employees. This in response to Tesla's repeated price cuts. They said Tesla's prices are fluctuating more than other manufacturers, complicating planning and increasing risks. SAP did clarify it had never offered Teslas to employees in Germany, its biggest market for company cars. The brand made up a small portion of the company's global fleet. It's true, price cuts do have consequences on the back end, specifically for companies that have to manage that depreciation. I don't think this is a big deal for Tesla. The most recent data I could find had the SAP global fleet at 27,000 cars, and again, they said Tesla made up a small portion of that. Don't forget, SAP has announced that starting in 2025, all new vehicles ordered as company cars will be emission-free. So if Tesla prices can stabilize by then, we'll see if SAP can stick to this no Tesla policy. In case you're in Minnesota, get ready as their new EV rebate program launches February 7th. Completed applications will be reviewed on a first-come, first-served basis. If this applies to you, go ahead and pause for the details. Dartmouth College just said it's looking to replace half of its Department of Safety and Security's fleet with the Tesla Model Y. They said this was inspired by the adoption of Tesla vehicles by municipal police departments in New England. Definitely cool, but I went to look up the fleet size we're talking about, and they're going to introduce 4 Tesla Model Ys while maintaining 3 Ford vehicles. If you followed Electrified last year, you will have heard me say that at some point there's most likely an economic reckoning coming for China. Well, the cracks are widening. Here we have foreign investors selling $2 billion worth of mainland China shares just in January. That marks the strongest and longest net outflow in a decade. Now they're calling for forceful actions to prop up the stock market while at the same time suspending stock borrowing via exchanges for short selling. They're also loosening conditions for property purchases in Shanghai. Let's not forget what happened here in 2008. Of note, one of the most sold names was BYD. Nearly 30% of all stocks in China have been halted as their CSI 1000 index slid 8% in a few hours. This means the small cap stocks are getting hammered. Nikkei Asia saying in the aftermath of the bursting housing bubble in China, it could take more than 5 years for the country to shed excess stock. China's shrinking population is not going to help. Trying to understand how bad things get for China economically this year is obviously going to have an impact on Tesla's operations there. According to documents from the DMV, it turns out Apple tested its self-driving car more than ever in 2023, logging over, get this, 450,000 miles of autonomous driving in California. That number was almost 4 times what Apple did the year prior. It may be growth, but this is still a pretty insignificant number. In the United States, Tesla has raised the price of the Model 3 Plus long-range version by $1,000, Currently it sits at $46,990. This is clearly an indication that demand is outpacing supply, but there are two factors to this equation. So yes, it could mean higher demand. Yes, it could also mean that new production out of Fremont is slower than Tesla was expecting. For what it's worth, Troy Teslike has been saying that so far this year, Model 3 production at Fremont has been slower than expected. Lamborghini is now planning to reduce carbon emissions by 40% per car by 2030, but they're looking to do this across the entire value chain, including the plant, the cars, everything. Lamborghini also plans to launch its first full electric model, the Lanzador, in 2028. Then 1 year later, launch a full electric super SUV. Elon may be moving forward with yet another venture, on X posting, "Should I make the Texas Institute of Technology and Science real? It would of course have advanced social studies too." Today, the chairman of Stellantis shot down any rumors that they were planning to merge with Renault. Ford executives acknowledged the automaker has caused pain points for dealers and promised to adapt its transition to EVs in response. Ford's comment was a general statement about multiple issues that have led to falling dealer satisfaction scores. Ford was talking to their U300, which is made up of dealers selling fewer than 300 vehicles annually, and roughly half the company's 3,000 US dealers are in that group. Jim Farley said EVs are risky for the automaker and its dealers, and he had anticipated the company would not make the transition flawlessly. He promised to continue adjusting its EV certification program. According to one attendee, Jim Farley said, "Tesla CEO Elon Musk does not like you or our model, and we will continue to support you." This after Farley said that Ford bet on its retail network rather than a direct-to-consumer model like Tesla uses. Remember last week when I said dealers have a lot of sway over companies, specifically talking about GM? Well, here's Exhibit B. Geely has launched 11 low Earth orbit satellites, and they expect 72 to be in orbit by 2025 and eventually have plans for a constellation of 240. These satellites will provide high precision positioning support to self-driving cars, as well as other commercial functions like connectivity to the consumer electronics sector. Hyundai's North American CEO said, "I'm more confident and have a much clearer vision on how we should do this," referring to the Amazon partnership where consumers can now buy Hyundai vehicles through Amazon. They're still in the pilot program only, but Hyundai did make its first vehicle delivery to an Amazon employee in Seattle. Hyundai said, "We're working with NADA, the National Auto Dealers Association, because they see this is happening in the industry. It's not a one dealer or two dealers or one franchise. This is an evolution of the sales in the industry." We recently talked about Waymo applying for expansion in San Francisco and LA, but they may be running into some challenges. There is legislation in California that was introduced that would require self-driving services to be authorized by a local ordinance in each city and county where the service operates. Right now, autonomous vehicle deployments are actually regulated at the state level. This proposal, Senate Bill 915, would return control to the local communities who know their streets the best. And yes, we can probably thank Cruise and their debacles for this new legislation being introduced. If this bill were to be passed, in Waymo's case, it would mean it would need dozens of municipalities to pass ordinances to bring expansion plans to fruition. Deliberations on this bill could begin this week, but would likely not receive a vote until later in the year. As it stands now, the PUC has until February 20th to approve, deny, or suspend Waymo's application. Here we have the first ever Saudi-made Lucid electric vehicle that's equipped with a drone and AI tech on display at the World Defense Show. This EV is going to start being used within the fleet of security patrol vehicles in Saudi Arabia. The drone will work to fly and photograph places where criminal problems occur. They're also touting this vehicle having other AI tech like a light bar that has 6 cameras aimed at recognizing faces and identifying license plates of vehicles violating traffic regulations like being over the speed limit, parking incorrectly, or vehicles with expired registrations. We talked about it last week, but Rivian has made it official on X. Get ready to meet the R2 platform on March 7th. This is that event that's supposed to take place at Laguna Beach in California. Hertz has now paused plans to buy tens of thousands of EVs from Polestar this year. Between 2022 and 2023, Polestar sold about 13,000 EVs to Hertz. Polestar has now agreed to waive Hertz's requirement to buy its allocated number of cars this year. In return, Hertz is agreeing not to sell its current Polestar vehicles early or too cheaply. They said there's a clear intention to restart large-scale sales to Hertz in the future, but the two companies would have to review at the time whether a sales restart in earnest in 2025 makes sense. Last week, we talked about the 2025 Taycan and some of the new peak charging speeds. Well, shortly after that, a charging curve came out. We definitely still need more real-world tests. We need people like Kyle Connor to get his hands on this vehicle. I'm sure he will. And the question can be posed, if you're charging a battery over 300 kilowatts all the way up to around 60% state of charge, will that have any negative long-term impacts on the battery health when it comes to cycle life? Oftentimes in the battery world, everything is a trade-off. It's very early, but initial reviews of the 2025 Taycan are looking very promising. A new report from Tesla that came out thanks to a Freedom of Information Act request showed that Tesla has 140 fewer employees at Giga New York than it did at the end of January 2023. Current employment at the factory, where they manufacture things like the solar roof, superchargers, adapters, and the like, has 1,808 employees, which is comfortably exceeding their minimum requirement for those state funds. That number is 1,460 jobs that Tesla has to stay above to avoid that $41.2 million penalty. Don't forget, we also have that dojo expansion project for Giga New York that may be up and running as soon as this summer that will undoubtedly add some more employment. We may have Ferrari actually benchmarking a Model S Plaid at its Maranello factory based on this image. Right now, Ferrari has really been focused on hybrids. However, they did mention a full electric vehicle sometime around 2025. Tesla stock closed the day at $181.06 per share, down 3.65%, while the Nasdaq was down 0.2%. Nvidia's tear continues, the only green company on our auto and AI list. They were up 4.79% today. It was also a high volume day for Tesla stock, trading around 24 million shares above the average 30-day volume. Hope you guys have a wonderful day. You can find me on X, linked below. Please like the video if you did, and a huge thank you to all of my Patreon supporters.